But if gold is going to get remonetized, which it is going to, right, all the world's fiat currencies are going to go back to being legitimate currencies, right? Because right now, you have one fiat currency backed by another fiat currency. Well, I mean, how do you back the euro with the dollar if the dollar itself is backed by nothing, right? You have to back it with something. And central banks, and that's why they're buying. There are a lot of smart central banks that continue to buy gold. They are preparing for the day that they need that gold to give value to their paper so that they don't have a complete collapse of confidence. Because all this is based on confidence. Right? And if the confidence goes, then all the purchasing power goes. So central banks are getting ready. And so the price of gold is going to go way up. It's not just going to 2,000, it's going much higher. And you can see that if you look at all the assets, look at this global stock market, look at global GDP, look at all these other financial assets, and then look at the price of gold. And you can see that all these assets are overpriced in terms of gold, right? Gold is a very honest way to measure asset prices, right? You can't really measure them in dollars or euros or yen because you don't have a stable ruler because the currencies keep losing value, they keep creating them. But gold is very stable and you can measure value over time in terms of ounces of gold. And you could look at the bubbles that have been blown by central banks, and there's only two ways that they can be resolved. The price of everything else comes crashing down, or the price of gold goes up. And the path of least resistance politically is for the price of gold to go up, because the alternative is, a financial crisis like 2008, only much, much worse, and with no bailouts. Now, no politicians have the stomach for that. They're not going to swallow that kind of medicine. So they're all going to turn to inflation. That's the easy way out. That's what politicians have been doing for years. The thing is, it never works, but that doesn't mean they're not going to try it. They just get backed into a corner and they have no expedient alternative. And so we're going to have a paper collapse, and gold's going to go way up. And that's how we're going to have a monetary reset. And so it's not that we get widespread default on debts. That would be better. The debtors are going to be repaid in money that has very little value. So before that happens, you want to cash in all those paper claims and you want to get real gold. Right? Who knows where the price is going to go? I used to predict $5,000 an ounce, and people like to say, "Oh, Peter, see, you was wrong." Look, I was predicting 1,000 when it was under 300. I did not expect that we would kick the can down the road for this last decade, so I did think we would have got to 5,000 sooner. But my upside target is now much higher because the problem is so much bigger than it was in 2008, and the opportunity to maybe do the right thing is so much smaller. And so 10,000, 20,000, these kind of numbers are clearly not off the table for the price of gold, and of course that means the price of silver is going to be moving up even more. The best opportunity, though, I think, is going to be in the gold stocks. That's where you're going to see not only the 10 baggers, but the 50 baggers, 100 baggers. I mean, I think the amount of money that people are going to ultimately make in this space is going to be phenomenal. Because there is just no optimism really in this sector at all. I mean, other than the die-hard gold bugs. But from my vantage point, looking at professional investors, looking at the hedge fund community, looking at the big endowments or the pension funds, nobody is involved in gold stocks or even physical gold. It's the last thing on anybody's radar.